Trading tax considerations. Before we start, let's read that note at the bottom. You want to consult with a tax professional to ensure compliance with all relevant tax laws and regulations, and then they'll also help you pay less taxes by keeping track of your losses, stuff you bought for trading, all that stuff. Talk to them about it. They'll help you out, but let's just quickly go over this. I didn't want to leave this out. Most courses leave this out, but this is a big part of trading because the government wants your money. They're like, oh, you earned all this money, pay up. Now, you're going to pay your taxes. I'm not saying let's avoid taxes, but there's ways. There's a tax law. It's law for a reason. And if you follow the rules, there's ways of paying less taxes because you spent so much taxes throughout the year buying stuff. So that's how that works. It's not that you're not paying taxes. It's that you bought things for trading and there's sales tax on that. So you could deduct it from your income and readjust the amount of taxes you pay. So definitely talk to them about it. Get someone you trust and then someone that you like, because you're going to be coming back time after time because you're going to be trading for the long run, right? So capital gains tax, that is the tax paid on the profit earned from selling an asset that has appreciated in value. So that is what we want to do. We want gains, but unfortunately, government wants our gains too. Wash sale rule, a rule that prohibits traders from deducting losses from wash sales, where a security is sold at a loss and then repurchased within a certain time frame. So keep it simple. You took a buy, you lost, or you sold something and then you bought it because you lost, and then you went and now you're in long in a position. So that's kind of like washing it out. That's what I understand by it. Again, I'm just covering from what I know from this. You're going to want to consult with the tax professional. Tax loss harvesting, that's a strategy of selling losing positions to offset gains and reduce tax liability. Ordinary income tax, that is tax paid on income earned from trading activities such as day trading or scalping. That is mostly what we'll be doing if you do what type of trading I do. Your tax ID number, that is your unique identifier used to report trading income to the government. So you could set up a business that trades, or if you do these funding accounts, you could run it through an LLC or a business versus you as a person. And that gives you tax benefits, so something you want to consult with. Tax bracket, that is the tax rate at which a trader's income is taxed based on their income level. So the more you make, theoretically, the more taxes you're going to pay because you're in a higher percentage bracket. So everyone who's saying tax the rich, well, you're already going to be paying more taxes if it was the same tax rate for everybody because you have a lot more money to pay, let's say 10% on, for example. But no, you made 6 million, so now you're paying 20, 30%. And I'm not here to talk about taxes and all that stuff. I don't agree with it, but there's a way to make it less sucky by working with a tax professional who understands trading and how to set it up and get as many tax deductions as you can, so you end up keeping more of your profits and paying less taxes.